Good evening. This side, Rahul Magan here. When we speak about the financial market, we speak about a concept which is known as corporate action. Now, the corporate action may be initial public offer, follow on public offer, any kind of debt issuances, or any kind of convertibles, or probably spin out, spin off, or any kind of merger and acquisition. Now, ladies and gentlemen, for a novice investor, understanding these terms is really very, very tough because these are not only technical in nature, but also there is a legal angle to it. Now, when I say that there is a legal angle to it, I mean to say that every country of the globe is having its own Companies Act, having its own Securities Act. And since every company of the globe having its own Companies and Securities Act, henceforth they have their own interpretation. Of course, this interpretation is valid only for them because other countries may or might not be in agreement of that interpretation. But having said that, there is one universal concept which we are holding and that universal concept is so prevalent that it is the utmost duty of the investor to understand that. But there is a catch in that. And the catch is that we are dependent on somebody. It means that we cannot do our due diligence until otherwise we get the basic input from somebody. Of course, there might be some investors who are sophisticated enough, competent enough, who can do the same due diligence from their own without having a reliance on others, but there may be millions of investors in different countries, say XYZ, who do not understand this. You heard me very right. I'm talking about a very big concept which is known as IPO grading, or shortly known as initial public offer grading. Ladies and gentlemen, when a company in so and so country and so business stream is launching an initial public offer. Now, first of all, I will not devote more than 2 to 3 minutes to make you understand, those who do not understand, what is initial public offer. Initial public offer is when a company is entering into the financial market to raise the money. But do you know that the hard reality of initial public offer is 99% of the people feel that initial public offer means equities. And they are absolutely incorrect in that because initial public offer is of 3 types. Number 1, when I am launching my fresh equity in the public, which means as a promoter, I am ready to take a risk of dilution, which is called equity dilution. Because today, if I am holding a 50% stake in my company and I am coming up in initial public, I'm launching initial public offer, which means I'm inviting the bids from institutional investors, non-institutional investors, and retailers. Please underline the term institutional investors, non-institutional investors, and retailers. It effectively meant that I am looking for equity dilution. Going forward, there is a big probability that if today I am holding 50%, then that 50% reduced to 30%, maybe 25%, maybe lesser than that. It all depends. Ladies and gentlemen, please note that in this, I not spoke about the role of the investment bankers because that I would be discussing later at a specific point of time. But When it comes to initial public offer, whether it is type 1, which is the equity shares, investment bankers play a very, very important role, which means the syndicated agreement, the non syndicated agreement, and so on and so forth. Second is when you are launching a debt. Our mindset is designed in such a way that when we heard about equity dilution, we heard about the equity. No. There are many countries of the globe who allowed a debt to be raised and list on a relevant stock exchange, which is known as main boards, say, using having these terms and conditions. In fact, there are many global financial centers who even have securitized debt instruments. Securitized debt instruments to be listed on the boards. Even we have that also. And ladies and gentlemen, very important thing which we need to understand here is that when a company is raising a debt and company left with two options. Option number one, they can go private placement. Option number two, they can raise the money in the form of debt via an exchange, which means that the relevant debt is now tradable in nature. But the biggest catch here is that tradability. Tradability is dependent on country to country. There are countries where debt is extremely tradable in nature. There are countries where debt is not tradable in nature. The third is very important is the listing of warrants. Warrant is a gray area. Now, gray area doesn't mean it is wrong. Warrant means that there is very less understanding of the warrants in the public. In fact, some people believe that employee stock option plan and warrants are the same thing. It is just like Switzerland and Somalia both are same because both starts with S. No, one is warrant and one is ESOP. ESOP depend upon the company's law of that country, whatever XYZ so and so country. On the other hand, warrants depend upon the company policy first. The memorandum of association, articles of association, it depends upon that. And sometimes the companies act of so and so country having a specific valuation methodology, the way you can have warrants. So initial public offer is not about equities. Initial public offer is about equities, about debt and warrants. It is up to the company's law of so and so country and by so and so company who will decide that. Now, when we go ahead for a minute, let's assume that we willing to, issue equities. When we willing to issue equities, we really need to understand that we need to have the fundamentals on the board, which means the financial fundamentals on the board. There are many countries of the globe who even allow, the listing of a loss-making company, the listing of the companies who are extremely loss-making, and end result investors end up losing. There are countries in the globe who are extremely strict and extremely straightforward that only a profitable company can venture in the public capital markets. Okay, you are not profitable company, you can go ahead in the private capital market. Now, technically speaking, without entering into much of the discussion, that capital market is broadly divided into two parts, which is public capital market and private capital market. This is broad categorization. Now, having said that, there is a specialized forum in every economy of the globe, which is known as credit rating agencies. And the job of the credit rating agencies is straightforward, to do the IPO grading of that relevant company. Now, it's again depend upon it's again depend upon regulator to regulator how the IPO grading to be done. Sometimes the regulator have a straightforward formula. Sometimes the regulator do not have a straightforward formula. But in my respectful submission, there is definitely a gray area in that regards. And that gray area is the valuation methodology. Ladies and gentlemen, broadly speaking, valuation is divided into three parts. Number one, the absolute valuation, which is also known as the fundamental of the company. Of course, when it comes to the absolute valuation, the different person may have different perceptions. And that perception should not be discredited in limine. In limine is a legal term. So that perception should not be discredited. We need to hear. It's always advisable in the interest of natural justice to give that person an appropriate opportunity to hear and then decide upon the merit of the case. I repeat, merit of the case. On the contrary, the relative valuation is when I compare myself with others, that this is the industry performance and this is my performance. This is always subject to interpretation issue, and the human element plays a very critical role here. Because today, if I wish to do a relative valuation of a very big corporate in any XYZ industry, then it is up to me how I am going to be presenting that relative valuation. It's up to me. And ladies and gentlemen, trust that I can even tweak the case in such a way if I want to present this a favorable scenario. That is completely up to me. But having said that, like I said, this is a very technical thing, and I don't expect everyone to understand that. Third is called contingent valuation. Technically speaking, when we value a corporate action, and specifically speaking, initial public offer, follow on public offer, and others, right issues, composite issues, and all, then it is extremely hard to see that any contingent valuation is done by so and so credit rating agency. Because people believe that contingent valuation means when a relevant company is moving towards bankruptcy, and I tend to differ with this idea. Because contingent valuation, of course, this may be the one phase of contingent valuation, but when it comes to grading, that definition of contingent valuation should not be made as a benchmark. But of course, people have their perception, and I regard this. So, till now, we understand that IPO can be equity, IPO can be debt, or it can be warrant. But before we make up our mind, we need to appreciate that completely depends on the capital market of that country and the regulator, how they are taking up a call. That completely depends upon that. More importantly, the so-and-so credit rating agency to determine how they're going to do the valuation. My respectful submission is that when it comes to IPO grading, then first of all, that IPO grading should be launched or should come public before red herring prospectus. So there are two things, ladies and gentlemen. One is called letter of document and one is called letter of offer. Now, letter of document and letter of offer is something which looks same to most of the people. In fact, draft red herring prospectus also looks same to most of the people. But ladies and gentlemen, let me tell you that draft had red herring prospectus, letter of document, and letter of offer, all three are the different things. And probably we would be talking this in our next video. But having said that, one thing I wish to tell you that when it comes to grading, then my respectful submission is that should have done at an early stage. In fact, my respectful submission is that IPO grading should comes first before the public. And let's give minimum 30 odd days to the public different so and so agencies to determine whether the grading is conscious with their thoughts or they have some difference of opinion with that grading. And after 30 days, the draft head rating prospectus should become public. This is my respectful submission. In my next video, I would be discussing more about that. This is Rahul Magan. You have my number 9899242978. 9899242978. Thank you.